If you're someone whose portfolio is bleeding right now, you're not alone. Small cap stocks are down 20 to 30%, and even the so called safe mid caps have taken a beating. It feels like every stock, whether good or bad, is falling. If the results are bad, sell. If the results are good, sell because the valuations are too high. So the question on everyone's mind is, has the bull market ended, or is this just another correction before another rally? Over the past 3 years, we saw one of the most aggressive bull markets in Indian history, but there were clear signs that it could not last forever. In this video, I'll walk you through what really drove the market up between 2021 and 2024, why things are shifting now, and most importantly, how to invest smartly in this environment. And if you want to learn how to properly analyze stocks, how to separate strong businesses from hype, subscribe to our channel and join our Telegram group where we discuss these things in details. The market of the last 3 years was built on a set of very specific factors. The first big driver was the post-COVID recovery. The Indian economy, like the rest of the world, was coming out of a deep slowdown and the government responded with massive capital expenditure. 11 lakh crore rupees were spent on railways, defense, infrastructure and renewables. This fueled rapid economic expansion and created strong earning growths across multiple industries. At the same time, the market saw an explosion of retail investor participation. With easy access to discount brokers like Zerodha and Grow, a new generation of traders jumped into the stock market. And it wasn't just stocks. Retail investors were taking extreme risks, piling into leveraged F&O trading, which now accounts for over 90% of derivative volume in India. This wasn't traditional investing, this was gambling. Then came the IPO frenzy, but this was not driven by solid, well-established companies. The real action was in SME IPOs, low-float, micro-cap stocks, many of which doubled or tripled within weeks of listing. It became a self-reinforcing cycle. Investors were chasing momentum, pushing stocks higher, creating the illusion that the prices only go up. And for a while, it worked. But nothing in the stock market lasts forever. The first cracks started appearing when valuations stretched too far. Even fundamentally strong businesses were priced for perfection, and suddenly good earnings were not good enough to sustain their stock prices. At the same time, the post-COVID economic recovery was running its course. Government spending is still high, but project approvals have slowed. India's GDP growth is stabilizing at 5 to 6%, not the kind of explosive expansion that justifies seeing the kind of rally that we have had. And then there are external factors. With Donald Trump back in power, global trade is once again uncertain. Historically, US India relations have faced challenges under his administration, and if the US economy slows down later this year, then India's largest export market will be hit. There are no strong bullish triggers left, just normalization. So if you've been riding the small cap wave or over the last 2 years, you're probably feeling the pain right now. And here's the reality, not every stock that falls will recover. Many of the names that led the last rally will never make new highs again. When the market changes, the winners change too. This is where a lot of retail investors go wrong. They keep buying dips, assuming everything will bounce back without realizing that market conditions have fundamentally shifted. So, what should you do now? The biggest mistake would be to assume that the stocks will rise just because they've fallen. The market is not forgiving to those who don't do their research. And this is the time to be selective, to focus on businesses and not the hype. Look at the earnings, look at the cash flows, look at whether a company can actually sustain its valuation. A lot of people made money over the last 3 years simply by following momentum. That won't work anymore. If you want to be a part of the group that gets this right, subscribe to the channel and join our Telegram group. I break down stock analysis in detail so that you can invest with confidence in any kind of market, not just when things are going up. The last 3 years were easy. The next 3 years will require skill. See you in the next one.